Joining us right now is Gagnon, Executive Vice President of National Bank's Wealth Management Division.
Yes.
Martin, thank you so much for joining us. It's great to have you with us.
Thank you. It's a pleasure.
We're here at the Inside ETFs conference in Montreal. And speaking of ETFs, there's been quite an evolution underway in the industry. How do you see that the ETF or the proliferation of ETFs in Canada is changing retail wealth distribution?
So it's a good question. There's a lot happening in wealth management in Canada, and I would say that the advent of ETFs is one of the many elements. And I think that it's generally driven prices lower for asset management as a whole. Now, interestingly, what we've seen, the most pressure is going on in institutional asset management, where we're now paying a fraction of the price we were paying just a few years ago for all kinds of asset management services. In the retail market for investment advisors, it's driven a move to fee base. We're now approaching 75% of our full service brokerage business being fee based. And it's a solid trend that has happened. And I believe that there's a couple of good impact for this. The advisors now can be more encompassing in giving services to their client, do true wealth management as a whole for their clients, so incorporating all kinds of other services in their value proposition. And of course, they need to justify this value proposition, and they need to add more services to the client, and that's great. It has also separated asset management from the advice that the client receives, and we like that because we've been betting on the value added of advice for a while. We like advice, we like investment advisors, and we've actually gone away from asset management. We run Canada's largest open architecture. We're the largest manager of manager. And what we believe is in the value added of advice given by a human to another human so that they can achieve their goals, their financial goals. So this fits really well into our review, and we benefit from lower prices in asset management that ETFs have created. And we can do a better job for our end clients. So I think there's a great story, and at the end of the day, we don't want to be competing with Vanguard. ETFs are great in portfolios of our investment advisors, and they need to justify their fee for advice, and this is what we're working on.
Yeah, I mean, it's recognizing that the cost compression in the instruments itself, the lower fees, the commoditization in some cases of markets, of instruments, of indexes, of active and passive strategies, has really empowered the advisor. It has really put the value proposition back into the advisor's hands. So really it has empowered the advisor more.
Absolutely.
By taking the cost associated with investing away from the investments themselves and associating it more with the service.
Yep, and now with all of these new developments, we're saying that advisors spend roughly 20% of their time on investment management, and they can spend more time on holistic wealth management and actually helping their client with being their financial coaches. And at the firm level, what it's done is it's shifted the margins from manufacturing to distribution, and that's a trend that has occurred and we believe will continue. That's how we position ourselves, and we're actually doubling down on that bet going forward.
How much of what's going on is being driven by investors?
Well, a lot. Obviously, we all do this for investors, right? But recently, we realized we did a lot of focus groups, and we realized that the industry needs to do a better job for clients. And when you listen to them, all they want to know is if they're going to be okay. Yeah. They don't really care if you outperform the benchmark or not. They just want to know if they're okay for retirement or for the baby that's coming or for buying a house, whatever the goal is. So we're shifting, going to goal-based, first of all. Second, we're doing a lot of training in what we call advice for life, so that our advisors are better equipped in dealing with those life moments. And ultimately, we want them to become financial coaches. It's beyond holistic wealth management, including trusts and estates and tax planning is great, but going beyond that, looking at the two sides of the balance sheet, looking at expenses management. Sometimes it's the job of an investment advisor to say, dear client, you're spending too much. You won't achieve your retirement goal. So this is what they're asking for, and this is how we've changed how we train our advisors and what we want them to deliver for their clients, because that's clearly what clients are asking for. And this is a big switch.
Well, it's not really. I mean, it goes without saying now. I think it's been very well established. The idea that and the reality that the biggest risk investors face is behavioral risk.
Absolutely.
The mistakes that they often make, the timing, market timing, getting in and out of the market at the wrong times, getting out of the market too soon or too late, getting back in too soon or too late. So really, if you take that and you put that on the advisor to be the guide, to act as a guidance mechanism for advisors, to act as a source of guidance. I mean, to prevent them from making those quintessential errors that investors have made throughout time, that have cost them more dearly than the cost of investing or the cost of an advisor. I mean, the cost of an advisor is greatly eclipsed by the mistakes.
Absolutely, and we were doing a lot in terms of this behavioral coaching and behavioral finance. We're publishing a lot of content specifically about what you're talking, which is market timing destroys value over time. You need to be in it for the long term and so on. And at the end of the day, this is the most important thing that advisors can do for their clients. The analogy I use all the time is the internet is full of tips to lose weight. And everybody knows we should go to the gym 3 times a week. Now, what's the percentage of the population who does it? If you don't have help, if you don't have a trainer pushing you and reminding you that you need to go. So at the end of the day, for us, it's humans helping humans achieve their financial goals, and that is definitely not happening with a robo. Robos have brought great technology to the industry. We can open an account in 6 minutes, and that's great. We can release the administrative burden on investors. But at the end of the day, if the only thing you do is determine an asset allocation, implement at a low cost, and rebalance, that can get automated and it gets commoditized. You need to go way beyond that, and that's what our advisors are doing.
Well, we definitely love the idea of taking this whole idea of beating the market out of the minds of the investing public and really putting the emphasis on outcomes, on what is it that you're trying to accomplish? Are you on track to accomplish it?
Yep.
And that should really, as you said, that should really be the only ongoing concern that investors have or clients have of their advisors, which is how are we doing? Are we on track? Are we going to achieve our goals? Are we taking too much risk or not enough? And so those are really the sort of key issues that really have been lost in the past. And so, what do you see? What do you see as the biggest single opportunity or the biggest benefit of the evolution that's taking place?
Well, I think it's realizing that there's a whole lot going on in the retail world outside of finance that has had an impact on our life and our offering. Amazon offers a one-click buy button. It's not that simple for investments, but the fintechs and this evolution has helped us revolutionize the industry. As long as we do it for the benefit of investors, and we always need to listen to our investors at the end of the day. That's more important than the inner workings of a bank or a financial institution. I think that this is where the investor at the end of the day will benefit. Leaving the asset management to the pro, lowering your cost of implementation, no nonsense, financial coaching, and at the end of the day, I think we, as an industry, and that's what we're doing at National Bank, we can do better for the investor.
Terrific. Well, Martin, thank you so much
Excellent.
for your time. It's been a pleasure to talk to you.
Thank you very much. It was a pleasure.